We have with us Pramod Patwari, the CFO at Balrampur Chini, joining in on the show right now. Pramod, hi, good morning. Good to have you on the show. You know, Pramod, the last time that we were chatting with the sugar company, they said, don't call us a sugar company, call us the energy sector. But that bullishness aside, just wanted to understand about the prospects of ethanol, considering Balrampur Chini derives almost 13% revenue from distillery business, and almost 10 crore litres of ethanol has been produced, as I understand, already in the 9 months of the fiscal. With the current push that you're getting from the government and the incentives, how big do you think the industry will be, say, in 5 to 6 years down the line?
Good morning. See, it is very difficult to say where the industry would be 5 to 6 years down the line, because we need to understand that we are still dependent for our feedstock on the weather conditions. Particularly the state of UP this year, due to inclement weather, the cane availability is on a lower side. That is one part. But to answer your question, where the industry is heading, currently we are at around 8.5% of blending. Government has mandated 20% blending by 2025-26, and in the ongoing ethanol year, which begins from December, we are expecting a diversion to happen around blending to happen in the region of around 10%. And with the kind of announcement which we have been seeing from the government with regard to launching of flex fuel vehicles, next year definitely we are on the verge of attaining a higher blending.
Higher blending of around 10% is what you're expecting. But I also wanted to understand what the outlook is, because in FY22, OMCs had finalized tenders for about 385 crore litres, out of which about 353 crores had been contracted till date. So what is the growth outlook guidance looking like for entering into tenders with OMCs?
So for the ongoing season, the requirement for 10% blending is 459 crores. And as against that, around 416 crores has been offered. The contracted is around 385 crores, as rightly pointed out by you. We are looking at around 10% of blending this year in the season. So maybe around 400 crores of supply from the sugar industry, including the grain-based industry.
We were to get specific on Balrampur Chini, what is the update on your expansion program, Greenfield and Brownfield? And, what is the update as well on the distillery business?
As far as our expansion program is concerned, it is well on track. We are expecting to commence our distillery capacities around November 22. With the commencement of those distilleries, we will have the installed capacity available at around 35 crores, but this 35 crores will be available in FY24. For FY23, the available capacity, depending on the time of commencement of the new operations, will be around 23 crores. Within these 23 crores, we will use 2 crores to 2.5 crores for production of ENA, and rest we will dedicate towards production of ethanol.
Okay, fair enough. And I just wanted to get back actually to the sugar industry as a whole, given that we have seen globally prices rising as well, the currency has been weak. How are you looking at export opportunities for the sugar industry as a whole?
Yeah, as far as the exports in the current sugar season is concerned, we are expecting an all-time high export from India, minimum of 7.5 million ton, and we will not be surprised if it touches a level of around 8 million ton in the ongoing season. The value of Brazilian real as well as the ethanol parity is actually a tailwind at this point in time. So we are extremely bullish on the export from India.
And what about the pricing trends? How are you looking at that shaping up for your international markets, for the domestic markets? Do you believe that we can see global sugar prices continuing to rise, because globally sugar is still in deficit?
Yeah, you are right. At the global level, we are still seeing a deficit of around 2 million ton, and the projections what we are hearing for the Brazilian production next year is at around 34 million tons. So there will be an opportunity to export from India. As far as the pricing trajectory is concerned, if crude continues to remain at the elevated level, this will be an additional tailwind as far as the international raw sugar prices are concerned. On the domestic front, this is going to be a very interesting sugar season in the history of the Indian sugar. We are going to witness an all-time high production, all-time high diversion of sugar into ethanol, best ever demand, as well as the highest ever exports. On the basis of all this, we are still expecting to draw maybe around 1 million ton minimum of inventory from the opening stock, which was around 8 million ton.
Okay. And give us a sense as to how realizations have been. What has been the average realizations? Have they been impacted given that costs have gone up?
Yeah, if we compare the current realization, which is around 34 and a half on an average ex factory in UP, which was around 32 and a half for the full year FY21, you will definitely see that there is an increase in realization, but the costs has also gone up. Cane price in UP went up by 25 rupees per quintal. Availability of cane is on a lower side. Recoveries are on a lower side because of the inclement weather. So all these factors has really pushed up the cost side also.
Thank you so much, Mr. Patwari, for joining in and giving us a flavor as to how things are shaping up for the sugar industry as a whole, as
Thank
well
you.
as for Balrampur Chini.